Hi guys, and welcome back to my YouTube page with my 9th video. My name is Philip Gunst and I am a full-time management consultant and part-time investor, and you probably know me from my Twitter, and you can find a link to my Twitter account in the information below this video, where you can find all sorts of educational tweets. You can find threads about specific companies, you can find overview of my portfolio, and so on and so forth. And today, by public demand, I'm going to give you an insight into what I am calling the DD engine, which is basically my process of going through a company whenever I'm doing a due diligence on that specific company before buying it. It is something that quite a few of you have requested, and I think it will probably, even though it's important to emphasize that this will not be an exhaustive exercise, it will probably give you some insight into some of the tools I'm using, some of the steps I'm taking, and so on and so forth. So let's have a look at it. So as mentioned, a due diligence is never the same basically for whatever company you're analyzing. That is important because you can spend 1 hour, you can spend 10 hours, and you can spend a week, and even though you are spending a week on doing a due diligence, you will never really get to the bottom of it. So it really comes down to you providing yourself with a governance, a strategy, or a playbook on how to really approach the situation whenever you are doing your due diligence. I posted a thread on my Twitter back in, good question, I don't really remember now if it was back in November or December, about the DD engine and some of these steps that I am taking whenever I'm doing an analysis, and that is also what will be the foundation of today's video. So basically, the first thing I would do is that, as I've said before, you get sources of inspiration wherever you find them. A good place for it is Twitter, as such. And basically, what is happening could be that somebody I admire or think is extremely competent on Twitter recommends a stock or tweets about a stock that he or she has bought, and I will instantly put it to my watch list, which is on Yahoo Finance, and then I'll basically jump into it. So the first thing I would do is basically get an overall understanding of the company. Just for the sake of it, I've chosen Teladoc Health as sort of the case in point here, because it's quite an easy case to sort of have a deep dive on. So basically, what I would do is that I go to the company webpage. I would probably browse a bit. 12,000 clients, 4,000 employees, 51.5 million US paid members, and 15 million visits since 2015. Okay, what are they doing? Our solutions deliver virtual care for consumers, so on and so forth. Sort of just browsing through, in their own words, here are some of the clients that they're working with. Thought leadership, global impact, here's some of their news flow, and then what you often see in the bottom of the page is that they have what is called investors, and I would often go there. It provides me with an overview of their investor relations or investor event side. So they have an event with JP Morgan on January of the 11th, and they have the news flow here. And what you often can find as well is some presentations here, news and events, resources. I guess it's under resources really. Maybe not, but again, what you would often do is that you will find their investor presentation, and then you will go through that as well, just to provide yourself with some insights. The next thing I would do is that I would go to Yahoo Finance just to see how is the stock actually developing itself. Here you have some of the key indications: market cap 38 billion American dollars, EPS minus 1.44, indicating that they're not profitable yet. Days range, 52-week range, it sort of has increased by 150% or so from the bottom to the top of the range, which is actually right now. And then you can basically just have a look at it here. Over the course of a year, it's up by, as said, 150%, and on a 5 years up from 10 to 63. So basically a stock that has been developed quite nicely since 2015, where it also seems to be listed in the US. And then you can sort of, if you wanna deep dive in some of these, what I would often also do as part of the overall understanding is to have a look at some of these forums where people are commenting on stocks, and what you have here on Yahoo Finance is the one called Conversations, where again it is basically a forum of people that are commenting. Here you have top reactions, and you can filter here on top, newest, so on and so forth. Congrats to all longs that held through the dips all the way to 170 and never wavered in their decision. The market always rewards the patient. We have a long way to go. So what this basically do is that it provides me with an insight into what are the investors actually saying about the company. What you would also do is that you would go to Twitter, and then you would type in TDOC, which is the ticker code, and then you would have an overview. Here is the top ones. If TDOC clears 253, it's heading to 300 real fast. So these are some of the probably the most liked. Richard Chu, and then a thing I like to do is to put people you follow in, and then put a latest. And what you will see here is some of the people you are following, what are they saying about this stock. Benchmark said that it was one of the winners on Friday. Weekly portfolio snapshot from Chris Perunia. Richard Chu talking about TDOC, that is one of his primary picks. And again, this is really simply to create an overview of what are people saying about this company. And yeah, it is. Maybe it provides you with something, maybe it doesn't, but it provides me with something for sure. And then we have Stock Twits as well, which is another forum, a bit more of a cowboy land really, a lot of Robin Hooders here, because you are able to be anonymous, which basically provides a bit of a toxic environment really. But that is sort of what I would do to get an understanding, and what this really says is something about message volume. So you can see here message volume up by 2%. Here is a look at it, and you can see that it has sort of been up and down, and likely fluctuates with the market being open. But it also provides you with an understanding of what are investors' perception about the company. Also, what are some of the analysis that is probably more on Twitter. I know Chris Perunia as well. Richard Chu has some analysis on stocks like TDOC. So again, a good sort of foundation for the next step. And the next step in it could be to have a look at Google Trends. What is the interest over time? What I've basically done here is just put in Teladoc Health in it, and what you could do is also to maybe compare it. Let's take an example here. One of the potential competitors is OnTrack. OnTrack is another telehealth company. Obviously they are not that much. Maybe if we were saying OTRK instead, and then just for the sake of it say TDOC over here, let's see, okay, Teladoc is still significantly more searched for. And again, what this does is provide you with a bit of understanding of what is the interest out there. Could provide another example, which would probably show the same as with OnTrack is Gravity, which is, look at it. Gravity is not that searched for, and that means basically, is it a company that is in the eyes of sort of the trending investors, or is it simply one of those under the radar plays? And both can be fine, but again, often it creates some momentum if you have lots of people in there. Otherwise, it could also, if you have lots of people in there, it could quite quickly become a bubble, a hype really. So find your way of doing this. Next step is basically looking into management, and what I would do is that I would probably jump to LinkedIn, and then I would search for Teladoc Health, which is here. And then what you do is that you come to their company LinkedIn page, just check if that's the right one. It is tagged to the stock TDoc, and then you can see all employees. And what I would probably do, because if you go here, you would likely end up in a space where there's lots of people, and it may not necessarily actually filter the most senior people first, but it actually does. Here you have the CFO Mara Murphy, but you also have the CEO Jason Gorovich. And what you would do is that you would go to his page, and then you would see, okay, what is his experience? So he has a short bio here, that's fine. Then you would jump down, maybe have a look at the activity. Are they posting any interesting things over time, and then see, okay, what has he actually done? So he has been the CEO since 2009. Maybe he's one of the founders. That is really uncertain. But what did he do before? He was Chief Marketing Officer and Product Officer at Empire Blue Cross, Chief Sales. So again, it's difficult based on this, because WellPoint is not necessarily one of those blue chip companies that you really know. So difficult, and he has a marketing profile. Does that fit to being a CEO? He's been educated through University of Pennsylvania and stuff, and maybe have a look at the recommendations down here. What are people saying? Jason is extremely bright, motivated, entrepreneurial, and innovative in his approach. So this provides an sort of an surface look at it from what I would say. And then another thing you could do is, of course, go to Glassdoor. Glassdoor is a sort of the Trustpilot of employers and companies. So what you would get here is reviews from former former employees. Also, you can see ratings about Jason Gorovich, who is the CEO, of course. Good experience, companies growing, cons, KPI heavy, angry clients daily. Okay, interesting finding. Senior machine learning engineer interview, unprofessional experience I ever had. If the hiring managers are so busy, do they think that they don't have anything to do? This was at Livongo. Livongo was one of the companies that Teladoc acquired last year, I think. Maybe it was in 2019, I don't remember, to be fair. But this is sort of provides an overview of what are the former employees really saying about the company, and as you know, if your employees are happy, your clients are probably also happy, and if your clients are happy, then your shareholders will likely also be happy. And then the last thing you could do when it comes to management is really to maybe go back to the LinkedIn page, see if there's some contact info. There likely won't be. No, there's not. But then go back to the company webpage, go to contact, investor relations contact, that is Patrick Feely. You can send him an email, or otherwise now you actually have an overview. So P. Feely, what I would suggest or assume based on this is that, so we have Jason Gorovich, he is likely called J. Gorovich in his initials, and then at Teladoc Health. You can try and send him an email, see if what happens. If the responsiveness is quite good, then it's likely a good sign, really. Okay, that was sort of the management. Then we'll jump to the next one, which is the product and project. And again, this is really something that is extremely difficult to get an overview of in a short period of time, because you need to have an understanding of what is the product really, what is it that are the differentiation parameters, what is the MOAT, and this will take some time for sure. It needs you to go through some of the investor presentations. I would probably also have a look at YouTube. I would do some Google search for Teladoc. Maybe also some of the competitors, do some comparisons based on some specific aspects or parameters. And then what I would likely do at last is to have a look at the financials basically and see what are the revenue split. In this case, you would probably go to the financial info page here, and then quarterly results. You would go to quarter earnings Q3, and it would jump up here, and then what it would basically do is that it will give you some sort of revenue split here. It's on US, international, and total. Quarter ended September, year-on-year growth 111, total revenue in 2020 September 226 million. And maybe you are possible here you have some paid memberships and visit fee only, and you can sort of do these deep dives on several segmentations really. Not sure, to be fair, what it can be broken down at, but this will provide you with a sort of a quite good understanding of the revenue split as well. The next thing I will jump to is market growth. So again, Google is really your friend when it comes to market growth. So what I would do is that I will go to google.com, and then what I would do is telehealth market growth. Do a search, and what will come up is likely some of these reports. Let's just open a few of them. Markets and Markets here is a quite good one. Maybe we can also find something from Statista. Telemedicine market here, 2019 versus 26. And then you will basically just get into it. Here you can see it. Global telehealth market trend. 2012 estimated value $38.7 billion. By 2025, it is expected to reach $191.7 billion, which is a CAGR, which is compounded annual growth rate of 38%. So in other words, this is a market that is growing significantly. However, what it also says here, the COVID-19 pandemic has had a devastating global impact on the health of the population and huge economic impact. However, that will basically, what that means is that telehealth will likely be an enormous driver and thing going forward. So a few drivers: technology adaptation, restraints, healthcare fraud, challenge, behavior barriers, opportunity, AI and analytics. We know for a fact that Teladoc's platform is AI and software driven. North America accounted for the largest share of the global telehealth market in 2019, so there's also some geographical aspects you can see here. And this really, of course, you don't need to buy the report. The report is priced at $5,000, so it's quite pricey. But again, another perspective here, quite similar. 2019 valued at 45 billion, 2026 175 billion, and here you don't even have that many sources of information, but again, you can do some deep dives. So that is what I would do with the market growth really. What is interesting here is of course the total addressable market, which is this number. So by 2026 we expect the total addressable market for Teladoc, and then of course if Teladoc is only managing some of the markets, then of course their specific TAM will be small, but the total addressable market is this number, $175 billion. A huge number really, and relative to the $226 million they had of revenue in the September quarter, there's a huge upside of course. Okay, let's jump to the next one, which is the market situation. This is a really broad one. So market situation is of course an overview of key peers and competitors. What it will basically do is that it will provide you with an overview. Telehealth companies. What it will do is that it will basically provide you with an overview, maybe a list of companies that you can compare. And of course you need to understand what are the elements that you want to compare when it comes to this. And what you want to do is that you will basically end up with a conclusion after quite some hours of research, is that you will end up with an understanding, is this really a blue ocean market or is it a red ocean market? Red ocean is when it's extremely crowded, there's lots of players in there. blue ocean is the opposite, of course. Is it fragmented versus consolidated? So consolidated could, for instance, be the aspect of Teladoc acquiring Livongo Health in 2020, 2019. While fragmented is when there are loads of companies that have a very small, very tiny market share in the market, so it's extremely crowded. Back to the red ocean. Then you want to have some understanding what is really the regulation when it comes to healthcare and doing it online. As it also said in one of the market reports, fraud is probably one of the things that are interesting, and I could imagine that regulators would have an opinion on that. So again, do some Google searching regarding regulations as well as entry barriers to the market, because I guess you need some certificates when you enter this market in order to be able to drive a telemedicine, telehealthcare platform, being able to actually treat people with this platform. And then, of course, again, back to the analysis of whether it's a fragmented or consolidated market, basically, is that you will also, if it's fragmented, you will be able to quite quickly be able to spot if there are some M&A targets or mergers and acquisitions, so potential takeover targets for a company like Teladoc with a market cap of 38 billion. They took over Livongo, which was quite a big chunk. Could also be small players that could provide some synergistics. So basically, this is an overview of some of the players. Teladoc is mentioned here. Annual revenue 553 million in 2019. Have some others: Doctor on Demand, MD Live, and again, you can do loads and loads and loads and loads of these searches, really, and it comes down to how deep do you want to go. Here is an overview of the 10 best: Animal, MD Live, Doctor on Demand, Live Health, Virtual. So I could imagine there are quite some few. 260 plus telehealth companies to know. So for sure, this could be. I don't want to do that conclusion on this only scratching on the surface, but it could be an industry that is quite crowded if there's 260 plus telehealth companies simply in the US. But again, it really comes down to how deep you want to go. I'm working with the due diligence in my daily job, and I can tell you, it's so much easier to do due diligence on listed companies relative to non-listed. And when you're sort of doing analysis on companies that are, for instance, private equity owned, you will end out in some of the darkest corners of the web, really. I had a case about fishing tackle, and really, wow, I ended up with ad for fishing tackle for several months because I had been in so many pages about fishing tackle. So you will either also do that. People will basically think that you are extremely unhealthy mentally if you will search for telehealth in the amount of to the extent that you may end up with if you're doing some of these analysis. So the next thing I would do is look into the market growth. Market growth is also not market growth, but company growth. And again, company growth is many things, and again, based on the case, you really need to understand what are the metrics we're looking for. But what I would do here is investor presentations, quarterly financials, and then one of my sort of key tips, or at least one of the cheats in here, is Simply Wall Street. Simply Wall Street is a tool, screener, also actually you can put your portfolio in there, that is on 10 elements, comparing or doing some data-driven analysis of companies. And here we are taking Teladoc again. Some of the key takeaways: earnings are forecasted to grow 58% per year. Risk analysis: shareholders have been substantially diluted in the past year. That's probably because of the acquisition, and there has been some significant insider selling over the last 3 months. Okay, let's go to that. So we can see that sold by companies. So down here you can see if it's a solid bar, it's sold by individuals, otherwise it's sold by companies. Here you can see that individuals have also sold some, but it's mostly companies. And what do you see down here is that who is it that's selling? Kinnevik has been selling, that's a Swedish one, has been selling but also buying, so it seems to be a one-off, really same amount of shares. And then have a look at some of the recent insider transactions here. Ownership breakdown, and really what this does is that it provides you with an overview of so many great aspects: cash runway analysis, balance sheet overview. They have 977 million in debt, likely because of the acquisition. High debt to equity ratio actually. Long-term liabilities, financial position analysis, return on assets, return on capital employed, and here you both have it on the last year, 3 years ago. Return on equity, past 5 years annual earnings growth, not that interesting because we know that they are not growing at all. Revenue here, on the other hand, is really growing nicely. Future return on equity, earnings per share, and again, this is really a fucking goldmine when it comes to providing you with some insights. Expected annual earnings growth 58%, and you can really just go on price to earnings, price to book, share price, fair value is set to 210. So simple Wall Street's algorithm thinks that Teladoc is overvalued actually. Price to book 9.94, shareholder returns, and then comparison to some of their peers or similar companies. Wouldn't really call any of these one-to-one peers really, but this is really a good tool and something I can recommend. It's free. You can also upgrade it to something that is a bit more pricey, but the free version is actually doing it for me, to be fair. And again, when it comes to company growth, you want to find the metrics that are suitable, and it really depends on the case. It can be earnings per share. Earnings per share is of course the sort of bottom line growth, how much profitability is running down to the bottom and how much are they growing their profitability. Often what you would see in growth companies is that you don't really want to, you don't see any profitability because every single penny earned on the gross margins will be reinvested into the company. Then you have gross margin growth, which is a quite good benchmark for the profitability on sort of simply by cost of goods sold relative to the revenue. You have EBITDA margins. You have for instance, it could be if it's an e-commerce player, you would often look at active customers. You could also have a look at paying customers. That is probably one of Kahoot, the Norwegian edtech gamificational player. What is something they would look at? Paying customers growth, conversion rates, likely something you would look at for travel agencies, and so on and so forth. You can really do loads of these, and what I would do is that I would basically put up an Excel sheet and compare it, have some of the metrics really in throughout some of the columns, and then have a few companies to compare it with. In this you would basically take the closest peers, maybe the 4 or 5 closest peers, and then do a comparison in terms of these growth parameters. And what you will end up with is an overview, a map, really a game board of players within this specific space, that will provide you with an understanding of who are the most growing players, who are the most profitable, who are the most revenue driven, and so on and so forth. Moving on to scalability and business model, and this is really something that will likely be one of those again that you can go really deep in, but also it's a difficult and tricky one really, because what is determining the scalability and the business model. So what I would look at here is, of course, geographical scope. So go back to the company webpage, have a deep dive in the Q3 report. So what is the geographical scope here? Right now, US is really taking the biggest chunk. You can even see that relative to 2019, the sort of the split between US and international is decreasing significantly. So US is growing, but international is not. Maybe they're just simply focusing on the US and growing right now. It seems that the US and North America is the most growing market region within Health. But again, have a look at some of the market reports again. See what are the geographical scope, what are the markets that are attractive, and is Health or some of the competitors, are they sort of working within these regions. Then there's something regarding intellectual property, which is more about what is it actually that is providing this MOAT, this differentiation parameter for the specific company. I could imagine for Teladoc, it's really about their software platform, their AI algorithms. What is it that they specifically are able to do with that? Is it something that is patented? Is it something that is not able to be copied by any of their competitors? Is it brand awareness that is really doing the thing? Is it user interface? A good example from the gambling industry, for instance, even though it's a hugely fragmented market where some of the players are really consolidating, but it's a hugely fragmented market. For instance, in gambling, what you see is that user interface and sort of getting on a platform that is really strong is something that is creating a winner in that space. So have a look at these. We've also talked a bit about it with these food delivery companies and also e-commerce players. Are they building their own fleet? So basically building on logistics. I know Mads Christiansen is really happy and interested in that. Whenever he sees an e-commerce player that is sort of growing their own logistics, so they become asset heavy instead of being asset light, because then it really creates some sort of differentiation relative to peers. So that is really what I would look at when it comes down to scalability and the strength of the business model. Then there's the financial health. I don't want to talk too much about that because we have already been into Teladoc's quarterly earnings and investor presentations a couple of times, but you can also go back to Simply Wall Street and have a look at some of the financial health aspects here to get yourself an understanding of what is the financial health. We saw that they had quite a big debt, but again, balance sheet here, 1.2 billion in cash and short-term investments, so really having a quite solid and robust cash run rate. Then another thing that's interesting, wow, from my perspective, is analyst coverage. And again, analyst coverage is, of course, not really that important because analysts are often biased. They are often having conflict of interest if they are, for instance, getting paid by the company to do these analysis. They may be underwriters in some of these bought deals or private placements. So there's lots of sort of red flags you need to be aware of when you're looking at analyst coverage. However, it provides me with some sort of guidance on what is really the analyst and the market's perspective and perception about this specific stock. And what I would say is really that it's not really a huge driver for me. It doesn't really have that much of it doesn't have a huge weight in my overall model when it comes down to choosing a company. But it again, because let's say the Teladoc went up to 500 within the next month, then I can promise you that all of the analysts will refresh their rating consensus and their analyst ratings, price targets, buy recommendations or sell recommendations. And you've seen it with a company like Tesla that has been hugely covered by analysts, and they have been extremely bearish on the company for a long time, and now they have been squeezed that much because of their short position, so now they are all long and bullish on Tesla, really. So it provides you with an understanding, but you really need to be aware of some of the red flags. And I'm using tip ranks. You could also use market beats, for instance. But tip ranks is really quite intuitive when it comes to providing you with an overview. It's a moderate buy based on 19 analyst ratings, 12 buys, 7 holds. The high is a 305 price target, the low is 200, and the average is 244. Right now, we saw that it closed on 263, so right now it's above the average target. And then again, if you have a premium, you can try and look into the reports. Actually, Oppenheimer stick to that buy rating for Teladoc. That's 2 months ago. Teladoc recent pullback brings buying opportunities, says JP Morgan. They have a 270 buy. Here, Sandy Draper from Truist Financial, 252. And Credit Suisse with a 263. Shares could see weakness on merger closing, says Credit Suisse. So again, provides you with an overview of what are the most prominent analysts saying, and they also have ratings, so whether they're quite good at their job or quite bad at their job and show more ratings, then maybe this is close by the paying more. But that is really a good one. Then you have some alternatives again. Red Eye is a Swedish version. Let's just have a look at that. redeye.se. Red Eye is a Swedish both community that is creating some of these community over here that is basically private investors doing analysis on companies, but they also have their own sort of investment banking analysis engine. Then you have Seeking Alpha, which is really another example of a great sort of community-driven analysis. So again, analysis-driven, sort of written by private investors. And again, if you aren't registered, I am, so just don't want to log in. But there are some paying rules on Seeking Alpha. The free version is quite okay. I actually have a premium on Seeking Alpha, but again, you do you. But I think it's a quite good tool. And again, be aware of the conflict of interest. Don't be sort of drawn by the bias here. Private investors in the companies are obviously more bullish. Shorts are obviously more bearish. And again, some of the analysts may also be biased because they either are underwriters in some of these bought deals or so on and so forth. Okay. Insider ownership is another one that is quite interesting, and I'm using Nasdaq. Nasdaq has a tab called Ownership Summary or Institutional Interest, Institutional Holdings it's called, and what you can see here is that 71% of Teladoc is a hold, of the outstanding float is a hold by institutional owners. Shares 145 million. 572 of the institutional holders are increasing their position, with 347 decreasing. There are 990 institutional shareholders in Teladoc, with 242 with new positions and 108 that has sold out their position. Then you have an overview here of the 990, and it's 66 pages. But again, what you're looking for, of course, some of the most renowned institutions here. It's BlackRock, Bank of America, but most interestingly, probably for many of you that are in ETFs, ARK Investment Management is in here. A really good page, really. I really like this one, and it provides you with an understanding of how is the distribution. And you can also see that actually on Simply Wall Street, the split between institutional, so public companies have a very small one, state and government very small, individual insiders have approximately 1% of the company, VC, PE firms have 10%, and general public have 32, institutions have 55. So the 70 something percent on Nasdaq is likely the institutions together with the VC firms and the public companies. And again, you have the same overview in here. Really good overview again. Kinnevik, Swedish, one of the largest actually holders in here, above the flagging of 5%, and again, yeah, really strong overview and something I'm really fond of looking at. Yeah, I think that is actually to a great extent it. I could talk a little bit about social media interest. I think we've touched upon it. Facebook, Twitter, some of these forums. Also, I could talk a bit about share price development and maybe also valuation metrics. What I really think is that it's really varying how you're evaluating a company like this. They're not profitable. They have quite a big debt to book ratio. Growing significantly. So what I would probably do is have a look at enterprise value relative to the sales for 2021, but maybe also forecasted sales to 2023, maybe 2025. Do some assumptions and hypotheses about the CAGR, so the compounded annual growth rate, and then sort of find a fair value really relative to peers, but also be aware that right now we're in a stock market that is extremely overextended. So right now we're running on the fuels of the central banks and their stimulus programs, and sort of the lack of alternatives to our investing. So again, comparing to peers may not be that relevant because, well, the peers are also overvalued, right? So it really comes down to what is it that you're interested in? Is it whether they will be profitable within the next 3 years paying a dividend, or is it whether they will continue their growth? And the investment thesis, the investment rationale varies greatly. And I think there's no right or wrong when it comes down to looking at these. I think really earnings per share and profitability is not really relevant when it comes to these growth plays. But on the other hand, I think it may also be relevant to look at something like asymmetrical perspective on this, and whether or not the downside on the CAGR is larger than the upside. And I think for a company like Teladoc, it sure is not the case. So while this ended up being quite a long video, however, I hope it really provided you with some insights into my DD engine and some of the aspects and steps I'm taking whenever I'm analyzing a company. As said when I began this video, this is not exhaustive, and this is really not a fair benchmark of my process, because it really is a heavy process. It takes time. It is really time consuming as hell, and there's really no limit to it. You can continue and you will never be done analyzing a company. And that's also why in some of my tweets I'm saying that you should really spend the majority of your time on the stock market to continuously monitor your positions and really continuously analyze the companies you are in, rather than monitoring your portfolio. Because you can just continue. And again, if you want to be this steep, if you're copy trading, or if you don't want to do any due diligence, which is extremely stupid, then, well, it doesn't really care. It doesn't really matter, right? However, I think if you want to be this deep in your analysis and due diligence, then you probably shouldn't have too many positions in your portfolio. But again, that is individual, and diversification is also a good aspect to put down to your portfolio. But this was some of my insights. I hope you enjoyed this, and I hope it helped you a lot. As mentioned in the beginning, I would love to get a subscription or a like on this video if you are interested in seeing more of this content. Also, have a look at my Twitter account and go follow me there if you don't already. I'm posting a lot of educational stuff in there, while you can also monitor and track my portfolio on a weekly basis. Thank you so much, guys, for spending time with me today. I hope you enjoyed this, and then have a nice one. Bye.